Well, we told you first and now it has been confirmed. HDFC-owned Groo Finance is now a part of the Bandhan family. The Groo Finance board has approved its merger with Bandhan Bank. Nisha Poddar, who was the first one to break the story, joins us now with more details. Nisha, congratulations on getting this right, but tell us what are the details of the final transaction?
It's a merger announcement of Bandhan Bank merging Groo Finance with itself. The swap ratio would be 568 shares of Bandhan Bank for every 1,000 shares of Groo Finance. Now, the stocks in focus would be the two companies in question and also the parent company of Groo Finance, HDFC Limited. Now, first, as far as Groo Finance is concerned, it could be under pressure because the market expectation in terms of the valuations from this transaction could have been higher. So that is one stock on our radar, Bandhan Bank. Whether or not it is an expensive valuation and an expensive transaction for Bandhan Bank to meet RBI guidelines is second question, and also HDFC Limited's intent to hold on to 15% stake. Of course, Groo Finance is a very small portion of the large book and the large size of HDFC Limited, but still that's the parent company and has shown an intent of holding on to 15% stake in the merged entity.
Thank you, Nisha, for that. So the math works out at an 8% discount for the current market price for Groo Finance. So watch out for that stock today. And also watch out for HDFC Limited because that holds around 15% stake in the consolidated entity. In fact, Nisha also spoke to Deepak Parekh and KK Mistry of HDFC on what they make of this transaction and what kind of synergies they see for the consolidated entity. Take a look at that.
I'm very optimistic on housing finance because everyone wants a home and government had made it easier by giving incentives. Government has made it easier to developers build small homes and you don't pay any tax on gains, on profits. Which industry in India, which major industry is tax-free? Now, the reason the government has done it obviously is to build more, incentivize developers to build smaller homes rather than larger homes. And we see a shift, even the big builders. In the last 2 years, we've seen the process takes time because you have to identify land, prepare plans, get different approvals. Approvals take a long time. So I expect in the next 3 to 5 years, there'll be a massive boom in affordable homes. Homes 25 to 50 lakhs, below 50 lakhs. Across the country.
HDFC Limited is the parent of Groo Finance. So why let go of a company? A merger could have also happened where you could have got such a large book.
But you heard earlier, the synergies between Groo and Bandhan are much, much greater than the synergies between HDFC and Groo. We both are concentrated in Western India. We have branches close to each other. And our average loans are coming down because of the government incentives. Earlier, there was a gap. Now we are competing with Groo. You cannot compete with a subsidiary of yours where you have 58%. There is conflict of interest.
So what are the grand plans of HDFC Limited being in the low-cost housing finance space, and how?
As I mentioned, 2 successive years, we've got the first prize for the largest number of loans given to EWS and LIG from the government. So we are expanding aggressively in that on that portfolio, and we are doing that. And even in MIG, we got the second prize 2 successive years. And so it is our objective to increase our affordable loan portfolio.
Right. And what is also the reasoning behind holding on to 15%, or at least making an attempt in holding on 15%?
When we say it's not a strategic investment, it's a financial investment. When we see an opportunity, we will offload some of it, but we don't want to offload it immediately if we can hold on to it some time. So we'll have to talk to Reserve Bank and see what their view is.
Right. And going forward, in terms of synergies between Bandhan and Groo Finance, how do you see the synergies really stacking up, and for Groo Finance in terms of access of funds and also geographical expansion?
No, I think it's a great match. It's a great marriage if we get all the approvals, because one is strong in East, one is strong in West, one is not doing housing, one is doing affordable housing.
After evaluating various options, we found that a merger with Bandhan probably makes more sense for a shareholder or a stakeholder in Groo than anything else. Coming first to why it makes sense from a Groo shareholder's perspective, this will create a very large lending platform for rural and semi-urban parts of the country, a very large lending platform. by creating a combination between the two, you will create, one, you will improve from a GRU shareholder's perspective, you will reduce the cost of funding, because as a bank, GRU will now have access to lower cost funding, which is typically what a bank would have compared to someone like a GRU. Secondly, it will benefit from a very large distribution platform of Bandhan, which has so many branches all over. And because it has so many branches, it can sell its products through so many locations. Bandhan will benefit from the fact that GRU has, over the years, created such a strong platform for housing loans. Very strong operating systems, legal systems, technical systems, basically strong systems in housing loans. So Bandhan benefits from that, and Bandhan also benefits from GRU's very large penetration in Western India.
So for HDFC Limited, what is the strategy with that 15% stake that you will get in the combined entity of Bandhan Bank after merging GRU Finance?
See, I can't comment on that because it all depends on what regulatory approvals we get. We will talk to the regulators and only then be in a position to know how much the regulators have approved. So I can't comment on that.
Okay, so that is KK Mistry saying that the merger will create a big lending platform for rural and semi-urban areas. But Mr. Parekh also maintaining that this is just a financial investment and they will look at offloading the stake as and when the opportunity arises. But Nisha also caught up with Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank, on promoter dilution plan as well as the deal synergies. Take a look at that conversation.
The stake of the NOFH is 82%. It will become to 40%. And out of that, 42% should be like to reduce and come to 40%. So in the transaction, it will be helped on that to reduce the 21%. Right. That means half of that dilution has come. Yes. So we have a good plan, constructive plan on that, but we need also the very good types of opportunities. We cannot be immediately like to do it on that. So we are working on that very constructively, and we are making the good strategy, how quick we are like to compliance to 40%.
So a quick question on the strategy. You said you will look at good opportunities. You may get more inorganic opportunities to comply with the RBI's guidelines. Would you be looking out for those? And what are these areas of expansion and diversification that you're keenly looking at?
We are also mentioned in the earlier to all of you on that. There is this is in different types of option is there. Option is to this, offer to sell, and many others on that. So it is not in the one option we are strategically decided on. So that one option we have been now taken, and some other options step by step will be like to go. But to not say that everything will be like to merger, not like that. We are trying to diversify it in a different way.
Tell us how the new company will look like as far as the housing finance business is concerned. Will you be collapsing all the housing finance businesses under Mr. Choksey then?
No, if you see that as a new bank, our very less penetration, less footprint of the affordable housing or housing credit on that. So when the operationally will be like to decide on that, how it can be good for this, accordingly will be like to merge on that.